Now what do you do when you go back to the charts? Okay, so we talked about make sure you always understand what it is you're trading. That 1.3614, what does that mean? That means how many US dollars I need for each euro. And as that continues to drop, as it has, we see that the US dollar is strengthening against the euro. The euro US dollar chart is in a downtrend. Now how do I measure a downtrend? Well, we've used the wave for this before. So here I'm going to use another chart, and this chart has a very specific set of tools on it. Okay? And what you can do to bring these tools up, okay, a little IBFX 4 101 here, you right-click your chart, and this little pop-up window comes up. You go over to your indicator list, and you'll get this indicator pop-up window. And you can see all the indicators that I've got running on this. Now, just a quick, just a quick aside here. As we talk some basic chart setup here. The grab candles, long range and short, are what color my, they actually color my candles. The dark red, the light red, the dark green, the light green. And I know some of you have gone over to my personal blog and downloaded the grab, and that's fine. But if you went ahead and downloaded that grab 2.0, that's fine. At some point, what's going to happen is we're going to have an auto installer with some specific settings for colors and so forth, and that's when I'm hoping in the near future we'll have it available directly from Interbank FX. Okay? So just a little info on the grab there. I also have a 200 period moving average here. It's a 200 period simple, as you can see here, 200 period simple on the close, and I color it white or just something thicker so I know it's different from the group of moving averages that I call the wave. Now the wave is basically the 34 period, which is a Fibonacci. Suffice to say that I tested the Fibonacci series to 1,597. What I was looking for while I was testing was a set of moving averages that would reflect what I felt was a good indication of market cycles, up, down, sideways. You guys remember we talked about this earlier in the month, mark up, mark down, accumulation, and distribution. And I was looking for a set of moving averages that kind of left a nice footprint, not too twitchy, not too slow, as far as what the direction of the market was, and additionally offered support and resistance within the context of a trend. Okay, so again, this is a Fibonacci number, and I tested the Fibonacci series all the way to 1597. And I do have a set of Fibonacci base moving averages that I call lazy days lines, and we'll probably have a video on that sometime. I don't know when, but maybe we'll do that and talk about how I use other Fibonacci based moving averages to identify support and resistance. Okay? When we do talk about the 5-minute setup later on today, I definitely will get into that. Okay? So the makeup of the wave, again, is the 34 exponential on the high. You notice that I picked that one green. Then the 34 exponential on the close, and you can see I have that one in steel blue. And then finally, the 34 exponential on the low. You can see that one, I paint that one red. And that is the sum total of the moving averages and the custom indicator you see on this particular screen. Now remember, the custom indicator is just a visual reminder of where prices are in relation to the wave. Because if I were to go to this Euro US dollar chart right here, okay, as far as up, down, the cycles, I mean, all the same things are happening on this chart. I just feel that this gives me a better definition and better identification of where that trend is and where the support in the trend is and where it shifts and where it's weakening. Okay, I just think it tells a better, more complete story. Realize that any time the candles are plotting green, they're above the wave. That's it. All that means is prices are closing above the wave. When they're blue, that means prices are closing within the wave. In other words, between the 34 EMA high and the 34 EMA low. And then finally, when they close below the wave, they plot in red. Okay? And again, what I call this is the strong side, which is above the wave, and the weak side, which is below the wave. And then, of course, we have neutral. And this further gives me an idea of when these market cycles are shifting. Notice, for example, we broke the wave, And notice how we kind of topped out here on what was kind of a weak uptrend here. Here it was strong, took a break. You can see the candles went blue a little bit. Went strong again, took another little break, even got weak, mixture of blue, greens, and reds. And then we kind of started wandering up real slowly. Mixtures of blues and greens as the angle of the wave really wasn't all that steep, but it still showed a little bit of an uptrend. Finally broke the wave. This big red candle, it broke the wave. Notice how now the candle's plotted red. Weak side of the wave. The market cycle is most certainly 4 to 6 o'clock heading down lower. We bounced, went neutral. So you can see it's just a visual reminder of what you're probably already seeing if you've just got the 3 moving averages on your chart. Okay? So that's something to think about. If you are definitely looking at some of the moving averages right now, and you're having a hard time taking the angle of the wave and having a difficult time with the clock readings, let's talk a little bit about market memory and look back, because this is a very important concept. And we'll start with the 15-minute chart.